Okay, it's tax time and you receive a 1099 MISC or a 1099 NEC in the mail. You're trying to figure out what to do with it. And if you're doing your own taxes, you probably kind of go through the different steps. You put the form in where the tax form is supposed to be shown in the tax software, and you kind of end it there. Well, there's a lot of opportunities and a lot of tax savings that you can take advantage of. And in this video, I'm going to walk through an example tax return showing you what someone that receives 1099s, what they typically do, and how much tax they pay for someone that takes advantage of opportunities to save on taxes and deductions that often get missed. And you'll see the tax savings at the end after we go through all this. So this video is geared toward those that are, think of like Uber drivers, you run out of Airbnb, you kind of run one of those rental businesses, or you're a contractor, you're an independent contractor, you do consulting work, you do design work, IT work. So if you have any questions, leave them in the comments below, and hopefully you'll gain some insight here on some tax savings opportunities. Thanks for watching. All right, so you received a 1099 NEC or MISC form, and you're figuring out, okay, what do I do with it, and how can I save on taxes? So I'm going to go through an example here. This is a couple, so two people, they have children. So there's always going to be different tax situations. If you're filing single or married, file joint. So in this example, they're married, file joint. And we're going to go through their income really quickly here. So they receive some W-2 income, and that totals $100,000. They had some interest income, some dividend income. Now, if this doesn't apply to you, obviously these are all going to be zeros. And if you only receive like contractor income, then obviously this box is going to be zero. They sold some stock during the year. Again, I'm just kind of creating a scenario here. But line number 8, additional income, $100,000. So just look at this. So they received a 1099. They did some contractor work. The total 1099 was $100,000. So that's where this goes. The total income is $213. Adjustments to income, I'll talk about that. You get to your adjusted gross income. They took the standard deduction. And look at this, line number 13, qualified business income tax deduction, 0. Okay. So we're adding all this up, and we're going to go down here. Their total taxable income is $178,000. So if you've seen my other videos on how watch my video on the tax credit first deduction, because I kind of walk through this page here, but essentially you kind of add up all your income, then they take the standard deduction that reduces the income. So their total taxable income is $178,000. The tax on that's $29,000. They had some credits, they had some children, that's credits. They bought a EV vehicle, that's another credit. So, but what I want to show you here is what they're not doing. So their total amount due at the end of the year is $25,000. Okay. And what they did here is they received the 1099, and all they did is they put that in the tax form. So if you're doing your own tax filing, or even if you're having someone else do it, there's a place, that people kind of look for, what's my 1099 income? There's a box there's a form I got to complete, the 1099 MISC or 1099 NEC, and they just put it there, right? Well, if you think about it, if you're doing consulting work, if you're running an Airbnb, if you're Uber driver, if you're doing any of this independent contract type work, there's expenses, right, that you can deduct. And when you record this as a flat, I received $100,000 of income here, you're missing out on all those deductions. Okay. So that's what I'm going to show you here in the video of some common missed deductions, right? So just remember this number, $25,364. Okay. So now what I'm going to do is we're going to go and remove that. So here's that tax form. We're going to open this up. So here's the 1099 NEC that they received for 2023. And in box number 1, non-employee compensation, $100,000. Okay. What we're going to do is we're going to remove that there. And I'm going to show you where we're going to put it. So we're going to move that. And now we're going to go to what's called Schedule C. Okay. And you'll see this in your tax return. And I'm just going to fill this out here. So first we're going to put total income received, $100,000. And I'm going to go to Schedule C here. This is essentially kind of your profit loss. Okay. So we're going to recalculate the return. And Ferris here did some student consulting. So $100,000 of income. Okay. One common thing that I see a lot of people, or I get this request a lot from clients of ours, are saying, hey, one of our employees is looking for their 1099. They're trying to complete their tax return. When I hear that, the first thing that I recognize is that that person is just trying to check the box. If they got a 1099, they're going to put it in that 1099, NEC form, and they're not completing the Schedule C. Okay. So if you're doing contracting work, right? IT consulting, design work, any of that, you should be completing the Schedule C. And this is where you get to show your deductions. So here's $100,000. Now, here's all the different common expenses that you can do. Advertising, right? Supplies, right? Think of like you bought a computer for your business, right? Your cell phone, right? Assuming part of that is used for your consulting business, right? That's another deduction. Utilities, if you're working from home, right? The home office deduction, that's like another missed opportunity. Here's the office expense. Insurance, right? Business insurance, that's another deduction. You're paying your accountant to do your taxes, right? If you kind of go down that path, or even if you're doing this through TurboTax or H&R Block, there's a charge there, right? You can't deduct that anywhere else on your return, but here's a spot that you can count that as a deduction, right? Use of your car for your business. Now, you got to be very careful. So I'd say high audit areas by the IRS is car and truck, vehicles, right? You got to be careful on this. So if you're using your car and it's strictly or part of it's for business, whatever portion that you use your vehicle for, so just say, 60% of your vehicle use is for your business, right? Whatever the cost is to kind of maintain that vehicle, if you got lease payments, you could take 60% of those and count that as a deduction. But what's key here is you got to keep track of your miles. You got to have an audit log of the use of your car for business. And if you ever get audited by the IRS, they're going to look for that. So a lot of these videos out there are saying buy their truck, buy this, this nice car and run it through the business. You got to support that you're using this vehicle for the business. And the way to do that is to kind of keep a mileage log. There's an app that I like called MileIQ that once you get in the car, it starts. Once you get out, it stops, and you can kind of keep track of what's business and what's personal. A lot of real estate agents kind of use this app, and it's a great IRS, prevention tool. If you do get audited, you can kind of show them this log. It's a great PDF report that you can show them. So anyways, here's all like common expenses, which are, essentially like deductions, or like rent, right? You're working from home, or even you're using one of these shared office spaces, right? Maybe you're spending, a couple $100s a month on office space. That goes there. Meals, right? Transportation, retirement account, right? You have a business now, you can open up a retirement account, and that's another deduction that you can put here, okay? And then, because your objective here is to kind of reduce this $100,000, okay? Because the more you get to reduce it, the less tax you have to pay. But again, think about your business and think of everything that you're doing, all that money you're spending to kind of run this business, like airline travel, taxi cabs, right? Like Ubers that you're paying for. There's a lot of stuff here that you can kind of deduct. So let's go back to Ferris' example here, and we're going to kind of just make up some expenses for him that he gets to deduct. So let's say advertising, he spent about $4,000 on advertising. Let's see here, travel, he did some travel for the consulting work, so let's say another $5,000. office expense. He bought some, computers. He bought a new laptop. Do that. He paid his CPA. Let's see here. Do his tax return. He's got a complicated tax return here. He also kind of used some contractors too to help him out, right? Some other professionals. We're going to do that. Some parking, right? He drove around and got some parking. 150. There's a lot more. Just rent, home office. So there's a square footage, and I'll do a separate video on that. But to say that's another $2,600. And then you can add some other expenses that you don't see here. So, just say like postage, right? He had to send a lot of FedEx postage, stationery, right? So, let's say that's, another, $450. Okay. So there's that, right? So we're going to recalculate here, and then we're going to go back to Schedule C here, and you see all these expenses that are popping up. These are all deductions. So instead of having $100,000 of income, now his income that he's paying tax on is $80,000, right? So he was able to find $19,000 of expenses, okay? So that's that. Now, another really important part of this is it's called the qualified business income tax deduction. And this is a valuable deduction here where you can, deduct up to 20% of the profit of your business. That's another deduction here. So we're going to mark that as a specified service because he's doing some consulting work. And we're going to recalculate this again. And then we're going to go back to page 1 of the tax return here. Okay. And I'm going to show you here what it looks like now. So remember this line 8, that was $100,000. Now it's $80,000. Okay. Because we have found all those deductions. So we reduced the amount of income he's got to pay tax on. Here's the other most important one. Look at this, qualified business income tax deduction, $15,000. So another $15,000 of deductions that he gets to reduce his taxable income by. So, and this number here is based off of this number here. So it's up to 20% of this number. But remember before, when he got that 1099, he just put that in his return and that was it. He didn't think about, wait, I got a business here. I get to take some expenses, but I also get this qualified business income tax deduction. This is huge, right? So now we got $145,000 of taxable income. And then here's his tax. There's some credits and stuff. Look at this. Remember that used to be $25,000 he owed. Now he only owes $14,000. It's still a lot of money, but by finding those deductions plus utilizing this qualified business income tax deduction, he saved himself in tax, over $10,000, at least $11,000 here. But this $15,000, he didn't have to spend any money to get this, right? This is strictly based off of this number. He spent, 20 grand to kind of reduce that 100 grand because he spent 20 grand in the business, right? But this deduction, you don't want to miss out on this. So the whole point of this video here is you get a 1099. There's a lot of opportunity to kind of reduce your tax liability if you kind of utilize this process correctly. But I stress on the mileage for vehicles because there's a lot of videos out there saying buy. But if you ever get audited by the IRS, they're pretty strict on this. So you got to look out for that. And that's it. So if you have any questions, let me know. But again, if you ever get a 1099, make sure you complete this. It's called the Schedule C here, profit loss from your business. And think about if you're getting a 1099, you're probably doing some type of work, some type of service, right? Like I said, you're an Uber driver, right? You're going to get a 1099. Maybe you got a side business of selling stuff online, right? And you get a 1099, right? You got expenses that you can offset that income by. If you're doing consulting work, design work, IT work, anything, right? Where you get a 1099, your objective is to figure out ways to reduce that income if you can. But if you think about it, if you're running this business, you're incurring some type of cost to run it, right? And you should be able to kind of utilize those costs that you're spending to reduce your taxable income. So thanks again for watching. If there's any other videos you want to see me do in the future, let me know. Again, I'll probably create one on the home office deduction. I'll probably do one on the vehicle deduction. If there's any others that you want to see, let me know. Thanks again.